24/7. We are in Achievers MCQ series for BFM, and today we'll be doing some important questions on various types of risk, mainly reinvestment and 2-3 types of risks are there, mainly related to Treasury. So follow this video till the end. Okay, download Adda 24/7 app on your mobile. In this app you'll be getting the premium study material plus live classes plus ebooks plus tests. Okay, so that much is enough, isn't it? So download it right now. Also subscribe to Officers Adda 24/7 YouTube channel. In this channel you'll be getting all the updates for JAIIB, CAIIB and various banking exams, and also free YouTube series on various topics, okay, of JAIIB and CAIIB, of course. Yeah, this is a new batch, just now started, February 13th, okay, yesterday only. Presently 80% off is going on the prices, as well as double validity on the Mahapack. You can join the Mahapack. Mahapack is the best, I'll tell you. Means 15 plus batches you get it for CAIIB. Okay, use the code Y432. In this batch we'll be covering all the numericals, objective questions, theories, case studies, everything. Okay, let's start. Yesterday I asked you a question: what is the reinvestment risk? Reinvestment risk means, many of you have answered. I have marked the answer also over here. When interest rate at which the future cash flows can be reinvested are uncertain, it is called as reinvestment risk. Means when you don't know at what rate will you be getting the FD later. Okay, any mismatch in the cash flows will expose a bank. So any mismatch in the cash flows means if the rate of interest changes, then your interest will be changing, right? So that will expose the bank to a huge risk. Since the market interest rates move in different directions, it will have a variation in the net interest income. So obviously, because if the rate of interest changes in opposite direction to what you are thinking, it may have a negative impact, isn't it? So basically reinvestment risk means what? It consists all of these. Means main definition is this: when the interest rates at which the future cash flows can be reinvested are uncertain, it is called as reinvestment. This is the main definition, and remaining two are just the supplements to this. Okay, so answer is all of this. Now next one, the features of net interest position risk are. What is this net interest position risk? Net interest position means what will be my net interest if the interest rate changes in my reverse direction. Reverse means other than what I have thought. So what are the options? When there are more than earning assets, when there are more earning assets than paying liabilities, interest rate may arise if the market interest rates adjust downwards. Means interest rate risk, it says risk may arise. Risk, I'll write it. Interest rate risk may arise if the interest rate adjusts downwards. So if my assets are more than the liabilities, okay, so I am earning higher interest than giving out. Okay, in that case, if the interest rate goes down, then I'll definitely be affected. Interest rate risk will be affected. How? Many of you might have not understood this A question, right? Let me explain you. Remember, imagine there are loans, okay, loans and what deposits. Okay, so imagine loans I am having rupees 100. Let's consider both the figures as same. Loans 100, deposit 100. On loans I am earning what? Let's say 9%. On deposit what am I giving? Let's say 6%. Okay, now what happens if the interest rate goes down? So I am earning more now over here. If the interest rate goes down, goes down means this goes down by 2%, 7%. Okay, and this also goes down by 2%. Okay, let's say 4%. So what will be my earning? My percentage earning will change. Or many times what happens? Interest rate adjusts downwards. So if my interest rate goes down, the percentage change, my income will definitely be affected, because here I was earning more. Here I'll be earning, see here, percentage wise I'll be earning. Okay, the difference wise I'll be earning. But the point is actual figure of money will go down, isn't it? So A will be the feature over here. It may result in reduction in NII. So it may result. Okay, means NII may go down, suppose, but depending on this will go down if my bank changes the loans and deposits in different proportions. It may have an impact on the economic value of the bank's assets. So that's but obvious. Means if my NII goes down, the economic value means financial value of my bank's assets. That will definitely go down, isn't it? So all of these is the right answer over here. See here, B is only conditioned if it may result in reduction in NII if both of them change in different proportions. If both of them change in same percentage, then my NII will remain the same. Because I am giving out less, I am earning less, but it will be affected because the depositors over here will go out, isn't it? What are not the features of price risk? Not, here we want not the features, okay? When assets are sold after their maturity, that may result in price risk. Means after their maturity. So is this a price risk? Assets are sold after their maturities. Now if I hold some bond after its maturity, so is this a price risk? No. It is basically operations risk, okay? Operations, it's a problem on my side. The employee who is holding these bonds or dealing in these bonds should know that any bond should be sold immediately on the maturity to that company, whichever company it is of, okay? The price risk is closely associated with banks' trading volume. So this can be the answer. Price risk is closely associated with banks' trading volume. If my trading volume is more, okay, so there the price risk might be affected. Okay, this may be the answer then. This occurs on account of open position in spot or forward contracts. So this is true because forex risk may arise because if I keep some position open in spot or in forwards. It is applicable to any individual foreign currency. Is it true? Means forex risk is applicable to any currency? Yes, it is true, but obvious. So what is the correct answer now? A, B, C, as this should be C, C or D, okay? So all of this is not true because we want not, okay? So the correct answer is A. Risk which may arise due to favorable exchange rate is called forex. See here, what is the correct answer then? If this is false, what is true? A risk which may arise due to unfavorable exchange rate movement is called forex risk. Got it? Now about the batch. Just now started February 13th. Okay, 80% off is going on. We are covering all the 4 subjects: ABM, BFM, ABFM and BRBL. Also the electives which you have taken, you get recorded videos for the same, for the electives, okay? So all the subjects are covered, numericals, case studies, objective questions, everything is covered, okay? 80% off going on. I'll show you how to get this off, okay? Use the code Y432 and also double validity on Mahapack. Mahapack is, again I'll tell you, 15 plus batches, too good. The features of basis risk are, basis means what? Change in movement of the interest rates for deposits and loans, change in different proportions. That is called as basis risk. Means, for example, loans, okay? Let's say this is loan and this is a deposit. Loan rate is, let's say, 9% and deposit is, let's say, 6%, okay? Now if this loan rate falls by 3%, it goes to, let's say, 6, and this falls by 2%, okay? So it goes to 4. So earlier how much was my NIM, net interest margin? 9 minus 6, 3. Now what is my NIM? 2. So I have reduced in this NIM, net interest margin, isn't it? I am earning less now. So that is basis risk. When the rate of interest for loans and deposits change in different proportions, different percentage, okay? When the interest rate of different assets, liabilities and off-balance sheet items change in different magnitudes, it is called as basis risk, isn't it? Just now I told you. When the interest rate of assets rise in different magnitudes as compared to interest rates of the corresponding liability, which may result in variation of net interest income, it would be known as basis risk. So this may be also true, isn't it? The basis risk is quite visible in a volatile interest rate scenario. Means volatile interest rate means constant changing. So this may be also true. So the correct answer is what then? A, B and C, all of them. So the correct answer is D over here, all of these, isn't it? How many? Let me see how many of you have typed D. Correct. D. Yeah, almost. Have you understood this basically? Type yes in the comment section if you have understood this. Type yes if you have understood. What is this basis risk here? Logic should be clear to you, isn't it? Which of the following is not correct regarding the basis risk? Not correct. Now we want a not correct. So false we wanted. When the variation in the market interest rate affects net interest income, to expand it, it will have unfavorable basis shifts. Means such a difficult wordings you get it in these questions. Remember, but these questions, these wordings you will get it in exam also. Okay, so that's why you need to be very correct and clear in reading these. Okay. So, when a variation in the market interest rate affects net interest income, to expand it, let me put this comma over here, to expand, it will have unfavorable basis shift. So, it gives an expansion. So, is this correct? We want not correct for basis risk. Okay. So, it will have unfavorable position. Expand means what? Means if my NIMs here, earlier example only, or let me give it again, loans. Okay, loan deposit. Okay, now what happens? Loan was earlier, let's say 9%, deposit was, let's say 7%. Okay, 2% gap. NIM was what? 2%. NIM 9 minus 7, 2. Now imagine loan, this falls down by, let's say 7% to 7, and this falls to 4. What is my NIM now? 7 minus 4, 3. So this is going to expand it. Is it unfavorable for me? This is favorable because I am earning more. So that's why A is not correct for the basis risk, right? It will have favorable shift. Okay. So this is false, and this is what I want, isn't it? When the interest rate movement causes NII to contract, the basis would have moved against the bank. That is correct. Means if NII is contracting means what? This 9 falls to 7 and this 7 falls to, let's say 1 only, means 5. Okay, not 5, 6. Okay, so what is my NIM then? 7 minus 6, 1. Earlier it was 2, now it has gone to 1. Okay, so that is unfavorable for me. The loan portion portfolio is funded out of the composite liability portfolio. This causes higher degree of basis risk. That is the correct answer. That is also true, because loan is always funded from the composite liability portfolio. Composite means what? Some assets will be, some liabilities will be of 1 year, some liabilities will be of 5 years, some liabilities will be of 2 years, right? Deposits. Okay, so that is known as composite, and for that we have horizontal and vertical disallowance. It's a separate topic. Okay, huge topic. So the correct answer is A. Got it? The features of embedded option risk are, embedded option risk means what? Okay, let's see the options first. When a bank is exposed to a risk due to prepayment of loan and premature withdrawal of term deposit, it is called as embedded option risk. Is it so? Okay, let me get the answer from you. This can be experienced in volatile situations. The greater the magnitude of the changes in the interest rate, the higher will be the embedded option. So changes in the interest rate, if they are higher, then embedded option risk will be higher. Firstly, before going to these options B and C, first check if A is correct. When a bank is exposed to risk due to prepayment of loan and premature withdrawal of term deposit, it is called as embedded option risk. So this is correct answer. Prepayment of loan. What happens if you increase the, imagine loan rates, okay, loan and deposits, okay. So imagine if you, what do? You earlier the loan was, let's say 7%. Then what do? You increase the loan rate to 9%. What will happen? 2% extra you are charging to that customer now. In that case, this customer, those who are good customers, they'll close their account because they don't want to pay extra 2% to you. Okay, so that is known as prepayment of loan. And similarly for deposits also, if you reduce it, your deposit will be in the reverse direction, isn't it? This can be experienced in volatile situations, but obvious. When the situations are very volatile, the basis risk is huge. Okay, means the embedded option risk is huge. Okay, many of the persons come for withdrawal. This, the greater the magnitude of the change in the interest rate, the higher will be the embedded option risk. Correct. Again, this is, so the correct answer is all of these, because if the magnitude is higher, if the interest rate changes heavily, upside or downside, if it changes upside for deposit, it's good. If it changes downside for loans, it is good for the customer. Okay, so the correct answer is all of these. Got it? So now, one for your homework. The counterparty risk is, it arises due to non-performance of trading partners when the counterparty may refuse to perform. It is treated as a transient financial risk. It is more associated with trading, and all of these. Very typical answer. One hint I will give you, all of these is not the answer. Okay, many of you might be thinking immediately all of these. All of these is not the answer. You check it. Okay, tomorrow I will answer. Okay, so now let me go to this code Y432 and how to get the discounts. Let's go to Adda 24/7. Okay, I would suggest, if you are having the app, go on the app. In the app you get 1% extra. Now you are getting 80%. In the app you will be getting 81%. Okay, through coins. There is a coin system available. Okay, JAIIB, CAIIB. Click on JAIIB, CAIIB. Click on CAIIB 23. Okay, see the batches. February 13. This, click on this batch. Okay, once you click on this, you will see the details over here. Details means what? All the details, like when is the batch starting, what are the timings, 13th Feb starting 6 a.m. Morning. Okay, so all the timings are there. Then you'll get the details also, means study plans also you'll be given. Plus recorded videos are available 24/7. Recorded videos means what? If you miss out on any class on any day, you can definitely get it back through the recorded sessions. Okay, ebooks are available. Okay, subject wise expertise is available. Now click on view offers, put the code Y432, Y432, click on apply. Now look at this, 23,999 reduces to 4,799. Such a huge discount, 80% off you are getting. Huge discount you are getting. Okay, go for it immediately, because this offer comes sometimes, it's not always. Okay, so go for that. Also I would suggest go for the Mahapack. In Mahapack what do you get is, remember, see this, click on, go to the front page again, JAIIB, CAIIB. Click on JAIIB, CAIIB Mahapack. Click on CAIIB Mahapack. See this, you are in CAIIB, click on CAIIB Mahapack. Okay, now once you click on this CAIIB Mahapack, look at this, you will get the details over here. Means what? 15 plus batches for CAIIB, all the 4 subjects. Okay, similarly video courses are available, full length mock tests are available, topic wise question ebooks are available. You can go through this. Okay, of course recorded videos are there. So let me come to the fees. 35,996. Click on view offers, put the code Y432, Y432, click on apply. See this, 35,996 reduces to 7,199, 80% off, and also the validity 12 months. Means 7,199 for 12 months, less than 600 rupees per month, less than 20 rupees per day, less than the amount which you spend on tea in our banks. Okay, so immediately go for this. Okay, because this is an investment for lifetime. Once you clear CAIIB, 2 increments are there, isn't it? This amount you will recover in how many months? Hardly 6-7 months, isn't it? Go for it. Okay, now let me go for this. Let me tell you what the new portion is. Why am I stressing on the batches? Because look at this, the new portion has 4 compulsory subjects: ABM, BFM, ABFM and BRBL. Okay, so 2 have been added new: Advanced Business and Financial Management, and this banking regulations and business laws. Also electives: rural, HR, IT, central banking and risk. There is no retail elective. Negative marking has been removed now, so that's a good sign for you. Okay, so tomorrow I'll be back with another session. Till then I would